Well, I think the markets are making two assumptions. One is that Trump is not going to go for tariffs, which will upset the markets, which of course then doesn't upset the markets. And the other thing they're going for is that the actual level of tariffs is kind of going to be 15% between countries, with a bit more on things like pharmaceuticals and cars. But the world can live with this. I think this is grossly overcomplacent, because the average tariff rate for the US is now nearly 20%, according to Yale Budget Lab, who are the best figures in the market. And that amount of tariffs is going to take 2,700 US dollars out of the average disposable income of a US citizen or worker every year. So it's a huge amount. So what people are forgetting is that these tariffs, even at the level that they're anticipating, these tariffs are immensely damaging. They're a huge tax increase. They're not a giveaway. They're a huge tax increase. And even the deal with Japan increased the average tariffs on Japan by nearly 7 times. So we haven't seen what this does to markets, because we haven't seen what it does to economies. It's slow to come through. But I would categorize the markets as being in bubble terrain. In other words, bad news is good news. Well, let me remind the markets, in my view, that bad news is just bad news, and it's yet to come.
David, very clear. When it comes to the tax, as you call it, what these tariffs actually equate to, the early indication is that it's been a corporate tax rather than a consumer tax. Is this just a matter of timing before it translates into being a consumer tax?
Not necessarily, but neither. You can put it two ways. Okay, somebody's got to pay the tax. That's why you call it a tax. It can be the US consumer if the exporting company to the US does not cut its prices, or it can be the exporting country if the producers in that country cut their prices and absorb the tariffs. Now, what is interesting is that we are seeing both happening. In the Japanese case, the Japanese auto producers, when Trump put on his first punitive tariffs in January, February, they cut prices on exports to the US by 19.6%. Okay, so that's enormous. They decided to absorb the tariffs, but that means they have no profits left. It means they're not earning a rate of return on capital, and the hurt is translated into the Japanese economy from a sector which accounts for 30% of Japanese exports being basically in a position of exporting them at a loss. Now, in the case of China, which is the big one that matters, and the US and the EU, that will not happen. The nature of the game there is very much not to kowtow out Trump. And if Trump puts on the tariffs, I think the Europeans, and certainly what we're seeing in the Chinese, will either not export goods to the United States, leaving them short, or they will export goods at a price which translates into higher prices in the US. That takes a while, but it's one of those two solutions. Either the producer pays or the customer pays. And that's what's going to happen, and it's bad for markets because it's bad for one economy or the other.
Right. David, fair point. This is Carolyn in the studio. Completely different topic. You've recently written a note about stable coins, all the rage right now, but does it pose a risk to financial stability?
Yes, it does pose a risk to financial stability, because stable coins are a form of artificial digital US dollar, but it has enormous attractions for people paying for goods and services, because it is instantaneous, 24 hours, and you don't pay any money to use it. So the dangers of stablecoin are that it penetrates other economies. It becomes a factor of destabilization in emerging markets, because those countries have people who don't want to own the domestic currency because the domestic currency is poor quality. And it can get right inside the European monetary system and take away the economic sovereignty, and with it the political sovereignty, of the ECB. So it is a very great threat. And when Scott Bessent welcomed it, he basically said so. He said, this is going to make for the supremacy of the dollar. Well, you know, that's neo-colonial language. And people had better read about this, because if stablecoin takes off, other countries are politically and economically at risk of losing their economic and therefore political sovereignty.
Well, where's the EU in all of this? They've been pretty good at regulating the space in terms of their MiCA legislation. What about stable coins? Are they too timid on this front?
Well, and they have to move faster. There's no doubt about that. And the ECB has to move faster in creating a rival stablecoin currency to the US dollar. Certainly, Mika has done a good job, but it doesn't stop US stablecoins coming to Europe because we have no capital controls. So if you want to take your mobile phone and transfer all of your euros or pound sterlings into dollars called stablecoins, nothing can stop you. So Mika can regulate when the originator of the stablecoin is in Europe, but not if it's an invasion.